Hi guys, it's Dr. Robinson. This is the May 6th, 2023 meeting of the Money Masters Investment Club. Not a lot to talk about today, so I think I've just got 4 slides we're going to go through. So without further ado, let's start looking at those. So let's look at our results for the week, guys. Starting NAV on 428 was 25.67. We had a gain this week of 52 cents. Our total NAV, or the new NAV, is $26.19. That's a gain of just over 2% for the week. The week has been volatile this week, and volatility is something we like. So we've been pretty happy this week. We had a couple of really good days in the market this week. I did have one really bad day. I think it was last Thursday, but overall, pretty happy with the results of the week. I've got a chart here. I'll show you what I'm talking about in terms of some of the volatility. But to give you an overview of the volatility, we've seen the VIX go from as low as 1560 this week, that was the low, to as high as 2140 at one point. So, and that's a huge swing. It doesn't sound like a big swing, but in the VIX, that's a huge swing. So we went from very low volatility to very high volatility, and then by Friday, by the closing bell, it had fallen back down to 17. So the VIX has been on a ride this week, both up and down, from lows up to highs, back down to some. Haven't quite come back all the way to the lows, but it gives you an indication of what's been going on in the market this week. Now, we kind of like that volatility. That's the kind of stuff that we thrive on a little bit. So we're okay with that. I prefer the VIX a little higher than where it is right now. We can stay in a trade a little bit longer. We can use better charts, or charts that we don't have to speed up that much. When the VIX gets lower, we need to speed up charts, and if we fail to do that, and that's what actually happened to me on Thursday. We had a high VIX, and then the VIX came to a low, or kind of stopped where it was, and we didn't change into some longer charts, and got ourselves into some trades we just couldn't get out of because the market just wasn't moving that much on Thursday. Having said all that, let's look at the slide I wanted to show you in terms of the market. Now, I know it's hard to tell on this. This is just an overview of the last 5 days. So that each color represents a different thing, by the way. So you're not going to pay any attention to the brown areas. That's the pre-market stuff. That's the futures, if you will. So that's the stuff that happens in the overnight hours into about 9:30 in the morning on Monday or Tuesday or whatever. So the brown stuff we do not trade on. That's the futures. The light blue stuff is the aftermarket. So that's where professional or institutional traders, they can trade a little bit beyond market hours. They trade on the news when a company like Apple, for example, comes out with its results for the quarter, and their stock is moving up and down, and we can follow that. Well, those folks, take advantage of that as well. I trade in this market from time to time, but not very often. I think the last time I did was actually when Donald Trump beat Hillary Clinton for the presidency way back, because the futures that day, or the aftermarket and all that stuff was just, those numbers were crazy. I mean, the S&P was down, I think, at 1.500 points, which is just a phenomenal amount. It didn't stay that way for very long, but you can take advantage of that. The dark blue is the actual market on a particular day. So this first dark blue over here on the left is Monday. And you can see Monday was a pretty good trading day. It did have some peaks and valleys there early on, which is hard to trade a little bit. But you can see the red candles coming down, and then about midday, they look blue. They're actually green, but those lighter candles going up, we had some pretty good trades in there. But you can see the rest of the day from on that Monday, it traded for almost the last 2 hours of the market, traded sideways before it actually came back down, and then traded to the side or level till the close. So it wasn't a whole lot of activity on Monday. This is one of those days where the VIX was at the 1560. So the VIX being that low way up here, you can see that the volatility or the market movement isn't as great. It's a little bit harder to trade on because when the market's moving sideways, there's no trend to fix. So remember, we're trend traders. We're looking for that trend. We have to know what the trend is. And on a day like this, there's just no trend there to play with. So we made some money on that day. We didn't make as much as we would like, of course. We never make as much as we like, to be honest. But at the end of the day, we had a pretty good day on Monday. Tuesday was a much better day. This is one of the big days that we had. You can see, for whatever reason, the market sold off relatively early. Right from the opening bell, the market, you can see this red arrow, I drew a red arrow in here, but this red arrow shows the market falling and falling hard. Now, we know at the time what was going on there a little bit, but still, the market fell down pretty hard. It found a bottom down here right around the 406 level, 407 level on the S&P, and or the spider technically, and it found that level. Took a while for it to start climbing out of it, but it did climb out of it. So we had some good profits here on the downside. We had some good profits here on the upside, and then you'll notice that it kind of went sideways again towards the end, even though there was a couple of chances here to buy some, to get into some calls and puts in the later hours. But there wasn't a whole lot of money in it, but that's okay because we made so much on these other two. Wednesday, you can see that Wednesday started out kind of strangely as well. And this is where the VIX is starting to pick up, by the way. This is where the VIX was getting into 19 and 20 and even to 21. But on Wednesday, this was the actual Fed day. And we had a pretty good day on Wednesday with the Fed day. We were in calls originally from the opening bell, and then you can see it went down, and then it went back up. Where we got into trouble, or where I got into some trouble on Wednesday, is in this mess. Wasn't terrible. It took a long time for things to work out, but this was after the Fed's announcement, and you can kind of see it looks almost like a Richter scale when it comes to an earthquake or something, where you kind of have these small little lines, small jiggly lines. That's the market going up and down, and then all of a sudden you end up with some of these really big ones. And the problem with these is when you get into these, the market can get really chaotic because you don't know whether the market's going to continue going in that direction, if it's going to stop and reverse, and if it stops and reverse, how big is the retracement on a position. So this is where we got into a little bit of trouble. Overall, though, not that bad. Thursday, a little bit different. Thursday, the market. Again, the market, when it came to, when you look at the chart, it's a little bit easy to kind of sit back and say, hey, this was actually looks pretty clear down here, where you see this, I've got the yellow line drawn to the side, so it's a sideways market. But it looks like the trend lines were clear, but they're not. And this is a day that I struggled a lot with. Now, I made some money in the morning on this particular day, but in the afternoon, I got myself into trouble. And I got myself into trouble after you see these red lines. You see the bottom down here, and you can see the market trying to go up. But you can also see while it's going up, there was a couple of spikes to the downside. And it's those spikes that got me into trouble because, again, you have a spike to the downside and you start thinking, oh, I've got to fix that. So you end up fixing a trade, but the trade ends up fixing itself and going up. And now I'm holding puts when I don't want to be holding puts. And I did that to kind of fix my trade or to protect myself to the downside, actually. So by protecting myself to the downside and then the market continuing up, I ended up holding some puts that I'm losing money on. I'm still gaining money on the calls, but when you're holding, let's say, 1,000 calls and 1,000 puts, those two are fighting each other. Now, one of them is eventually going to work its way to the better side, and I can, of course, get rid of one. But when the market is this volatile like this, where you see these big spikes up and down, you don't know which side to cut. And I just got lost in the trade there a little bit because I couldn't figure out which side to trade because it would go up 30 points, it would go down 40 points, it would go back up 35 points, come back down 25 points. And it was just one of those things where you're not sure what to do, and I just couldn't get on top of the trade. And I hung out there as long as I could. I bought some, you can see where the arrow kind of meets the lines there, but I bought some more puts there, and it looked like I was going to get out of trouble. But then again, you can see that even though there's a bunch of red lines in there, a couple of green ones in there again pop up. And again, those retracements make me think I've got to recover or buy some protection to the upside now because I'm now in a position to the downside. And again, I just got myself into a mess. So Friday was not a good day. We ended up losing some money on that day. Not a whole lot I could have done about it. I should have been in a little bit longer chart. because the VIX had gone up so much. Remember, the VIX is inverse to the market. So as the market goes up, the VIX goes down. So on Monday and Tuesday, or just before Tuesday, the VIX is fairly low, and then it kind of gets high. And on Thursday, it's really high. This is where it's in the 21 range. And here I need I need longer charts, and I had actually gone to the shorter charts because the VIX earlier in the week had been so high, or so low rather. So unfortunately, by time Thursday come along, I'm not thinking about my charts being too short or too long. What I needed to do though was get into some longer charts. Instead of, let's say, a 5-minute chart, use a 7 or maybe even a 9. But I was using 3s and 5s, and the 3s and 5s are much too fast on a market that is this volatile, because you're going to get a lot of head fakes. And I ended up getting a lot of head fakes, and it was one of the guys I trade with kind of reminded me of. He's like, "You're using really fast charts for such a high VIX," and he was right. And I didn't even think of it until he pointed it out. But that was that one day. So we had one bad day out of the 5, and then on Friday we actually had another good day. The market was up strongly on Friday. Not sure why. We were all kind of thinking about what caused the market on Monday or Friday rather to go up as much as it did. I think it went up a total of 70 points on the day before it retraced a little bit at the end of the day. But still, it went up pretty hard all day, mostly because of what happened with Apple. Apple came out with their earnings. Everybody expects Apple to have really good earnings, so I'm not entirely convinced that Apple was the genesis of this. But if you read CNBC or stuff, Fox Business News, they all gave Apple the credit for moving the market. Now, Apple is a heavyweight in the markets. The markets we trade is the S&P for the most part. We do an ETF on the S&P called the Spider. Symbol is SPY, and it is 6%. Apple makes up 6% of this ETF, so it's heavily weighted. So if Apple has a good day, generally the ETF is going to have a good day too. And then, of course, Microsoft is also in this market, and Amazon. So you got the big guys in this market, and they make up a really good portion of over this overall market. So if they're having good days, this market's going to have a good day, despite what all the other companies in the S&P might be doing. In fact, there's some research going on right now about what percentage of Apple and Microsoft and Amazon and stuff, how much they're affecting the overall market. Because right now, out of the S&P 500, it's called the 500 because there's 500 major companies in it, the 500 biggest companies in America. And out of those 500 companies, like 350 of them are doing lousy right now. But you've got so much profit from Apple and Microsoft and all these other companies that it's kind of overshadowing the losses of the vast majority of the companies in the S&P 500. So the S&P 500 is overall, the companies of the S&P 500 are struggling a little bit. But since Apple's not struggling and Microsoft is not struggling, they're actually carrying the whole weight of the S&P. So on Friday, we saw it. Now, the market did kind of transition into a downside for about 2 hours, maybe 3 hours on Friday. I did not trade at all in that downside. I traded on the upside. We had a pretty good day on the upside. And then I didn't do anything. And the reason I didn't, even in my charts were red, by the way, so it would have been safe to do so. But I just have one of those things where if the market's up 60 points or 65 points on a particular day, the idea of putting puts or trying to use puts to make any money is anathema. So it just doesn't feel like the right thing to do or a smart thing to do. So basically what I did is I just kind of sat back I have a little rocking chair in my office, and I sat back in my rocking chair and kind of watched the market. And I kicked myself every once in a while thinking I should have bought some puts, but overall, the risk is too great when you're up that much in the day. And then what I waited for was the market to go back to green, and it did. You can see where it kind of, the transition from the downside to back up to the upside, where it hit somewhere about 1 o'clock, maybe 1:30. And then the rest of the day, it kind of went up. And then towards the close, at about 3 o'clock, it did hit a high again and wanted to come back down. So it did come back down a little bit, but we had a pretty good day on Friday. We did take advantage of the early calls and then some of the later calls, but I did not take advantage of any of the puts simply because you just don't want to do puts on a day where the market's up 60 or 70 points. And by the way, even if you've done the puts, you can see a lot of green candles in there. And that would have scared, if you're doing 1,000 contracts, some of these green candles means you're down 60, 70, 80, $100,000 on a retracement. And that's not the kind of risk we want to take. So overall, good week. But the market this week has been chaotic. I'm not entirely sure how to read next week. I think the next week we don't really have any big announcements for the week in terms of companies doing earnings and things. We do have some inflation information coming out or data, but the Fed's already passed. We probably will see some a little bit of volatility because before the Fed does their announcement, the Federal Reserve itself, all 12 banks have to go into silent mode. They go into black mode. So they're not allowed to go out and get speeches. They're not allowed to go out and tell anybody anything because there's this fear that the market's going to be using that information to glean what the Fed is going to do. So they go through this quiet period. Well, the quiet period is now over. The Fed has made their decision. So next week we've got a lot of Fed talkers, a lot of Fed speakers, and I'm going to be the first to tell you guys when the Fed starts talking, it drives us nuts because I personally think they shouldn't be allowed to do it, especially during market hours, because when a Fed official comes out and says something, the market reacts to it. And sometimes we're in calls, and then somebody at the Fed comes out at 1 o'clock in a meeting that nobody's, that I don't have access to. The big guys do, the Merrill Lynches of the world, the Goldman Sachs and the Morgan Stanleys. They have people there, visiting or listening to it, and they have instant access to let the markets know what's happened. So they have kind of an inside scoop, and that's why I think this is tantamount to insider trading. They're trading on information that nobody else has, the general population doesn't have, because I don't have anybody that works for me that can go to those meetings and listen to a Fed person speak. So we are going to see a lot of that next week. So hopefully it'll be controllable, and it usually doesn't make the market too crazy. It does get crazy at some time, but it doesn't make it too crazy overall. So we expect to see a little bit of that next week. But short of that, most of the major stuff is done, and I do think that the Fed increasing rates over the next few months is kind of not on the table anymore. I think the Fed does have to take a pause here. They've got to let the market kind of, or the economy, it's not so much the market, they've got to let the economy calm down. Let's see how well the economy is doing with the amount of increases they've done. I mean, they've taken it up to 5, the high end of the Fed funds rate, 5.25. So they've taken it basically from 0 up to 5.25% in a matter of just over a year, which is one of the fastest increases in history. And now they need to sit back and say, okay, what impact is this going to have on the economy? We got some employment numbers on Friday. The employment numbers were actually surprisingly good. And again, that was part of the reason that on Friday we kind of expected some. You can see in that brown area there, that was the pre-market, and it's hard to tell here, but in that brown area, you see some red candles there. That was the announcement on the employment numbers. The employment numbers were so good that a lot of people who were expecting the Fed to have to cut rates by June were like, oh, now they can't cut rates because even though we're slowing down in the economy, our economy is growing only at 1% right now, which is terribly slow. It's just unbelievably bad. So with the economy slowing down as much as it is, and yet employment is still going up, it kind of, they don't go together. So a lot of economists were thinking, well, wait a minute, why is the employment number getting better, the unemployed, fewer unemployed people, while the economy is kind of slacking? So a little bit of a chaos there, but you can see that the market overall kind of ignored it. Whether that stays that way next week, who knows? But we plan to play the market the way we'd normally do. So overall, kind of a wild week in the market. We expect it to be another wild week, or I hope it's another wild week next week, because we like wild weeks. We just don't like them too wild. We don't like them to be, drunken soiree type of things. But overall, pretty good week. So those are the slides. I only have one more slide, and that's for something we talked about last week in the live meeting. We talked about having a get-together. I'm kind of just quoting it or calling it a family reunion, even though it's not family, and a lot of us have never even met. But we're talking about doing a family reunion, and it had some input from a bunch of people. We still haven't identified when we're going to do it, but I think we've identified the where. So we've decided on the Washington, D.C., Northern Virginia area. So we're gonna come up to Northern Virginia and D.C. area for our get-together. So the deal that I kind of promised everybody is I'll take care of the hotels. but I'll only cover up to say 5 days maximum. So if you want to be here for a week or 2 weeks, I'll do five. I'll cover the 5 days, but you're on your own for anything over that. And it's one hotel room for each, by the way. So if you want to bring your your aunts and uncles and nieces and nephews and stuff, I'll cover one hotel. And if you want to stick them, 30 people in all one hotel, I'm okay with that. I don't know if the hotel is, but I'm not gonna go out and rent 10 hotel rooms for one person so they can bring their entire family type of thing. So it's one hotel per person or per couple, if you will, maximum of 5 days. And I'll take care of the hotels. All you have to do is take care of the transportation. So whether you drive into the Northern Virginia area or DC area, I would, by the way, if you're not familiar with the area that much, Northern Virginia is safer and more hospitable than it is in DC. DC's got plenty of hotels and stuff, but there's, like a lot of big cities, DC is struggling with some serious crime issues and stuff. So I wouldn't suggest staying in DC unless, of course, you want to. It's not my choice or anything, but at the end of the day, Northern Virginia is the better place to go into. So you pay your transportation into Northern Virginia, DC area. Well, Dulles Airport is the closest to where I'm at, and some of the other people up here. Mike Harvey lives in the neighborhood in a place called Haymarket, which is not too far from Dulles. So Dulles is the closest, and if it's you come in on a certain day, we might be able to pick you up and save you an Uber cost or whatever. But in terms of when we're going to do it, I want to do it either June or July. Now, my preference personally is July. I've had some ask me about maybe August. So I want you to think kind of mentally June, July, or August. My preference is July. I don't know that I have any reason for the preference. It's just it gives me enough time to make sure we've got enough hotel rooms for how many people are going to come, and gives me plenty of time to kind of have some people help me with itineraries. We've got some people who've asked, and I'm going to throw out some names here, but Tom Dutoit, he's familiar with the area. There's some things that he probably wants to do. He's a Civil War buff, kind of like I am. So we're going to work on itinerary. Dane Emerson is going to help as well. So we're going to have some people helping on the itinerary. So if you want to go to see, of course, the museums, the Air and Space Museum, the Smithsonian, all the things, we thought maybe we could, if we had enough time to make it, we can get a tour of the Treasury. I told the guys I thought I still knew some people at the Treasury and I could probably talk to them. In fact, I do know some of the people at the Treasury, and they told me they would be happy to get a group to get a tour of the Treasury if you were interested in something like that. So I'm thinking June, July, or August. And again, my preference is July. In order to do this, of course, if we do it in June, we got to have a head count pretty quickly. If we do it in July, I figured my drop dead date here has to be about May 31st. So if you're interested in coming to the DC area, Northern Virginia area, sometime in July, or for this reunion, if you will, we plan to have picnics and stuff too, guys. So I want it to be a fun thing where we all get together, and it's not just all finance, because I don't want, at the end of the day, we all need a break from finance a little bit, markets and stuff. So it's just a place to come out and have some fun and a good time and meet each other. Again, most of you have not met each other. I'm hoping to get a whole bunch of my clients. I'd like to see, a couple thousand people pop up and show up and have a good time together. But we'll see what happens. But I do have to have a head count by May 31st, so I have plenty of time to reserve hotels and things. So if you're interested, drop me a line and let me know. The basic itinerary for the moment, and again, Tom and Dane are kind of going to do some tinkering with the actual stuff, but the overall view, and I'm a macroeconomist. I'm looking at this thing from a macro point of view. So my general outlook is we'll trade in the morning. So we'll find a place, figure one of the hotels. If I get a bunch of rooms at a hotel, I'm sure they'll give me a conference room that we can use in the morning for 2 or 3 hours or something, where we just kind of look at the markets and trade maybe. And then kind of cut the trading off about noon or so. We usually cut off a little bit at noon anyway because the market kind of slows down at lunchtime. And then we can arrange for trips. We can go into DC, do any of the museums. Maybe we can catch a ball game at the Nationals ballpark in DC. There's plenty of Civil War sites around. Manassas is not too far. Of course, even Gettysburg is not all that far. So I just want it to be a fun time. So again, if you're interested, guys, drop me a line or well, I'm the only one of you guys know at the moment, but we will have some other people you can contact. But just send me an email or text or whatever, and let me know if you're interested, and if so, how many people are going to be, that type of thing. If you're bringing your spouse or if you're going to bring your kids and stuff. But we have Mike Harvey's got a young son, and we thought that maybe. And by the way, some of the women asked if they came, could we have like a spa day for them? And I'm not big on spa days, but I know women are. So there's going to be somebody who's going to be handling the spa day type thing. So if you want spa things, and we thought that if people did bring their kids, now most of my clients are people who are my age, so don't really have small kids. So if you have small kids and you're going to bring them, because we're going to try to come up with some stuff for them to do to keep them interested, and just kind of make it like a family vacation type of thing where we go out, meet together and have dinner and all that sort of thing. So just a chance to have fun, get to know each other, and for a lot of you, just to meet you for the very first time. So if you have any thoughts on it, let me know. But again, if you are interested, I've got to know by May 31st because I don't know that I can reserve anything fast enough after May 31st if we're going to do it in July or something. It might be a little later if everybody decides to go into August or something. But my preference, as I said, is July. So having said that, guys, if you have any questions, comments, anything about the slides today or the presentation, just let me know, like always. And other than that, we'll see you on our next meeting in a week or so. Until then, have a good week.